Right now, somewhere on your chart, there's an invisible target painted on your back. And the big players in the market, banks, funds, the whales, can see it. They know exactly where you put your stop loss. That level where, if price touches it, you get kicked out of your trade automatically at loss. And is the uncomfortable truth. Sometimes price goes straight to that exact spot, knocks you out, and seconds later turns right back around in the direction you wanted without you. That's not bad luck, that's a hunt. Hunt for your stop loss. Today I'm going to show you in plain simple terms how it works, why it happens, and how you can see it coming before everyone else. In the next 10 minutes, you'll understand 3 things: why the big players actually need your stop loss, how to spot in advance the exact spots they target, and the precise fingerprint they leave behind every single time they do it. By the end, you'll stop being the prey and start playing on the same side as the hunters. And at one point, I'll show you a real one step by step so you can see it with your own eyes. Let's go. Let me describe a moment you've almost certainly lived. You finally find a good trade, prices start moving your way, and like a good student, you put your stop loss just below support, that level everyone says price shouldn't drop under. You do it exactly like every book teaches, and then price slips down, taps your stop by a hair, and immediately shoots back up, leaving you in the dust, and you just sit there, staring at the screen, feeling personally targeted. Here is the thing, in a way you were. Not by name, but your stop was sitting in the exact same spot where thousands of other people put theirs. And all those stops piled together are worth a fortune for somebody big. It works in reverse too. You bet on the drop. You put your stop just above the eye. Price suddenly spikes up, rips you out, and then crashes exactly like you predicted. Same exact trick, other side. But to understand why it happens, you need to understand one single word: liquidity. There is a problem the big players have that you don't. When you want to buy, you click and you're filled instantly because you're buying a tiny amount. But picture a bank that needs to buy a huge amount. Thousands and thousands of contracts all at once. If it just clicked, it will send the price flying up against itself, ruin its own purchase. It's like trying to buy every water bottle in a store in one go. The price blows up in your face. What it needs is a flood of people selling at the same moment, so it can buy from them without moving the price. This flood of people selling all at once is called liquidity. So ask yourself, where on the chart is there a big, predictable pile of sell orders just sitting there waiting to fire? Exactly, right below support, where almost every small trader has parked their stop. Think of your stops as a watering hole out in the savannah. The big player are the lions, and they know perfectly well that every animal comes to drink at the exact same spot. So, where are these watering holes? They are the most obvious spots on the chart. And that's the bitter irony. Just below a support level that jumps out at you, just above an obvious recent high, around big round numbers like 10,000 or 50,000, basically anywhere a beginner will point and say, there, that's the safe place for my stop, is exactly where the herd gathers. The more obvious the level, the bigger the treasure of liquidity waiting just beyond it. So no, you're not being clever by using the textbook spot. You're being predictable, and predictable in the markets means huntable. The big players don't read the future. They just know where you are because you where everyone else is. Your predictability is their treasure map. And now, the move itself. Price approaches that obvious level, then, instead of politely respecting it, it punches straight through. Fast, violent stab that breaks support by just enough to trigger every stop sitting underneath. The instant those stops trigger, they turn into an immediate sell orders. Translation: a flood of people forced to sell all at once in a single second. And that flood of selling is exactly the liquidity the big buyer was waiting for. He eats all of it quietly down there, fills his giant position at a great price, and then price bounces right back up, leaving that stub as a long little tail on the candle. To the small trader, it looks like a random move, almost a prank. To the bank, it was simply lunch, and the most frustrating part, you were actually right about the direction. They just knocked you out a moment before your trade started to work. This stub has a name. It's called a stop hunt. And this is where order flow comes in and turns the light on. Every stop hunt leaves a footprint, just like a thief at a crime scene. And you see them live as they happen. Let me walk you through them one at a time. First clue, as price stabs into a level, you see an explosion of selling. A sea of red, pure panic. Normally, with all that selling, price should keep crashing, and instead, second clue, it doesn't. It nails itself right there, at the lowest point, and won't drop another inch. And that means one thing only. Somebody down there is buying up everything they throw at it, like a giant sponge soaking up every drop. Third clue, at that point, the push flips. Red turns to green, meaning we go from sellers in charge to buyer in charge. And fourth, price takes off, snapping back up the way it came from. Stub, sponge soaking it up, push flipping, bounce. When you see those 4 footprints in a row, you've caught a stop hunt red-handed. Okay, let's put it all together in a real case. Picture a market that drifts sideways all morning, up and down inside a tight range, with one clear support line that literally everyone can see. Below that line sits a flat pile of stops waiting. Price creeps toward it and then, boom, a sharp, violent strike that breaks support. The crowd watching only the candles panics. Support is gone, it's crashing, run. But you've got the order flow open and you notice something strange. The explosion of selling is enormous, yet price only pokes just below the line and freezes. Tons of red, but isn't dropping. Think about it. If support were really breaking, with all that red, price should be sinking. Instead, it's stuck there. That means the big buyers hid right underneath. They are stuffing their pockets with the stuff that just got kicked out. So you don't jump on the drop like the herd does. You wait. Then the push flips to green. The buyers floor it. Price reclaims the level and flies up, trapping everyone who bet on the drop and blowing out the stops of everyone on the other side. You saw the hunt for what it was, because you looked beneath the surface instead of staring at the candle. 3 things to recognize it: an obvious level, a clean stop that breaks it, and price nailing itself underneath before it bounces. How do you stop being the prey? 2 simple moves. First move, stop putting your stop at the textbook spot. If your stop is just below the obvious support, you painted the target yourself. Give it some room or put it where the crowd isn't looking. Concrete example, if everyone put their stop right on a round number, you put yours a little further out, past the zone where the stop will happen. You risk a tiny bit more, but you stay in exactly when everyone else got thrown out. Second move, instead of fearing the stub, learn to hunt alongside the hunters. When you see price break a known level with an explosion of selling, and then you see it nail itself and the push flip, that bounce is one of the most reliable signals in the entire market. The exact move that used to steal your money now makes it for you. You just had to move to the other side of the table. Now, let's be honest, because I'm not going to sell it to you better than it is. Reading all of these live takes practice. Your eye has to get trained and fast. The biggest mistake is jumping straight onto the stub before the confirmation arrives. It's like trying to catch a falling knife. Always wait for the confirmation. The stub alone is never enough. You first need to see the price name itself and then the push flip. The second mistake is thinking every dip to a level is a hunt. Isn't. Sometimes support genuinely breaks, and only by looking beneath the surface, you can tell the difference. The third, as always, is risking real money before you can read it with your eyes closed. And the fix is always the same. Train first, then risk. That's exactly why I put together a free order flow course that takes you by the hand and explains stop ants and every signal, all of it on real chart step by step. It costs nothing. It's the first link in the description. Go watch it the second this video ends. And I know you're thinking, yes, at one point it will cost something. Nope, it's 100% free. And once you can actually read this stuff, is the part that surprises everyone. To trade futures and put all these into practice, you do not need a big pile of your own money. Most serious traders don't risk a single dollar of their own. They use a prop firm. It works like this, simple. You pass a small test that proves you can trade without blowing up the account. And from then on, they are the ones handing you the money to trade with. You keep the most of the profits and they take all the risk. You bring the scale, they bring the capital. It's the smartest way to start for real without throwing your life savings at a market that, in the beginning, eats you alive. Futures read with the order flow are exactly the disciplined, rule-based style these firms are looking for. A perfect match. The second link in the description is the future prop firm I personally use and a lot of my colleagues. Tested, legit, and there's a discount code in there too, so you can get it for a few dollars. Train first, get comfortable, then go and get funded. Before we say goodbye, a moment of honesty, because I respect you too much to spin you a story. Trading futures carries real risk, and most people who rush in lose money. Don't treat it like a magical trick to get rich. First, learn to read the market. Start small and build it like a skill, not like scratching a lottery ticket. And just to be crystal clear, this is a video to learn from, not financial advice. If this video finally made stop ants make sense to you, do me a favor, subscribe. In every video, I break down a concept exactly like this one, and I don't want you to miss the next one. Now, go practice, and I'll see you in the next one.